Take the SBP or buy a life insurance policy instead? I get this question a lot. So we're going to dive into this because it's important for sure. This is one of those ones you just don't know, but I have a default scenario and I'll share it with you. And I think my default is what the vast majority of you guys should do for sure. And this is more than just military, by the way. This is for a joint and life survivor annuity relative to just buying it on yourself. So let's use an example with Josh. I'm 4 years older than my wife. All right, so I'm a man. I'm 4 years older. Charlotte is 4 years younger and is a woman. Who's going to die first? Me. So when I die, I want to make sure she's as well protected as possible, obviously. All right, now if she were to die first, that changes everything. All right, so if the surviving spouse, the non-pensioner, dies first, that puts on the kibosh everything I'm going to talk about here. But again, it was assuming I die first. So when I die, I got three options essentially. Leave her with a survivor benefit plan, leave her with nothing, or leave her with a life insurance policy. One of those three things. That's it. Now, we're not talking about other assets. We're not talking about other assets or anything like that. We're just talking about those three things. So the SBP, what it is, the survivor benefit plan, is simple. If you had $1,000 a month from a military pension and you died, your spouse will get $550. It's literally that simple. So 55% is your pension payout to your surviving spouse. But it costs you a premium, essentially an insurance premium, to pay for that. I mean, there's no other way around it. It costs you some money to pay for that survivor benefit. We'll dive into that here in just a second. But if I have $1,000 a month pension and I die, Charlotte gets $550 if I have a SBP. If I have $1,000 a month pension and I die and I don't have SBP, Charlotte gets nothing. All right. So again, she either gets $550 or she gets zero in this case. That's all there is to it. Now, if it's a regular pension from a non-military thing, the joint and life survivor annuity is a lot different. In fact, so a regular pension, you're probably about 65 years old, 55 if you're, fireman or police, first responder. But generally speaking, you're older than a military pensioner for sure. So because of that, there's not as much as a wide berth between the two. So let's just use me again. So now I'm 65 years old. I get a life annuity pension. That's $1,000 a month. If I take a joint and life survivor annuity that covers both of us, it's not $1,000 a month. It's $900 a month. Does that make sense? So essentially, I'm sacrificing $100 a month for me in order to make sure that Charlotte gets a pension when I die, and her pension will be $900 a month at that point. I hope that makes sense. So I'm literally leaving on the table $100 a month. So the argument is to, instead of doing all that, instead of sacrifice, well, let's talk about what the SBP costs actually, so we'll know. So in this case, this is directly from the Department of Defense, and I'll put a link in the show. It's militarypay.defense.gov. So in this case, your survivor, your SBP for, you will use a $2,000 a month benefit, and I think your SBP costs you $130 a month is what it costs. So if I have $2,000 a month as my pension, it's going to cost me $130 a month, in which case Charlotte would get $1,100 a month at my demise. And that's today, all right? So SBP premiums, it costs in that case $130 a month. So I mean, literally, so in that case, I'm netting $1,870. So I got $1,870 what I'm netting, because $130 a month is what it goes for the premium essentially to provide the insurance protection for Charlotte. And again, the naysayers will say, and you're only getting 55%. And whereas a joint life survivor annuity is usually about 90% is what it is. So you get $1,000, usually your surviving spouse will get about $900 or maybe a little bit more. So that's where the naysayers come in, that you're paying a pretty good premium for a significantly reduced benefit at your death. But what they don't understand is that after 30 years, essentially, at age 70 or older, a member who has paid premiums for 30 years is considered paid up, and no further premiums are deducted from retired pay. However, the survivor benefit cover does continue. All right, so what happens there is on $2,000 a month, and we're using a 4% inflation, just reading this website from the Department of Defense. at $2,000 a month, when I'm 50, my pension would pay $2,960 a month. That's a 4% inflation, which we're not getting, but just for simplicity, they need to probably update that. But anyway, so I'm getting $2,000 a month. I retire as a first sergeant. I'm getting $2,000 a month. I hit what did I say, 50. I'm now getting $2,960 a month. My survivor benefit cost, because it's adjusted for inflation, has gone from $130 to $192. All right, so it's cost me $192 a month for my SBP. If I were to die today at the age of 50, Charlotte would not get $1,100, which she initially did off my pension. She'd get $1,628. So you can see my pension goes with inflation. The cost of SBP goes with inflation, as does her survivor benefit, which is, again, it's 55%. All right, now I'm 60. What I was getting $2,000 a month, my pension is now $4,381. Again, at 4% inflation. At my death, if I died at 60, Charlotte would get $2,410 a month. Again, it goes up with inflation, 55% of what my pension was at my date of death. My survivor benefit pension at this point is $284. My cost for that pension is for my survivor benefit plan is $284. A little bit more than double what I was paying when I was 40. So initially, $130 was the cost for my SBP. Then it went to $192. Then it went to $284. And again, we're using a 4% inflation. Now I'm 70. All right, so I retired as a first sergeant at the age of 40. Now I'm 70 years old. My retired pay is $6,484 a month. If I died today, Charlotte's pension would be $3,566. Again, 55%. But now, because I'm 70, my SBP is no longer. Now, it would have been $421 a month, but now, because I'm hitting the age of 70, I paid it for 30 years, I no longer have to pay that. So my true benefit is $6,484 a month. There is no SBP. Her true benefit will be $3,566. Now, when I'm at the age of 80, my benefit is $9,597. Her benefit is $5,278. And then again, if I was, my SBP would have been $623. So that's a big deal. I mean, that cost of living adjustment is huge. I mean, at the age of 70, she would be getting, 1.5 times what I was originally getting at the age of 40 when I first separated from service as a E8. I mean, she's getting $3,566 because it's inflation adjusted. And I've taught me I don't know what it costs for that, but it wasn't cheap. I mean, I was paying $130, $158, $284 and whatnot a month. But I'm certainly leaving her with a significant benefit, which is also growing with inflation as well. That's a big deal. All right, so let's talk about this. If you, in this example of the annuity, the pension would at 90 would be nearly 4 times the covered retired pay at age of 40, and over 7 times what the benefit would be at the time of election. This demonstrates 2 variable features of the SBP: payments never run out. The payments never run out, and payments increase along with cost of living adjustments. If you die shortly after retirement, so I'm 40 and I die at 41, let's just say, your surviving spouse could receive cost of living adjustments for 50 years or more. I mean, up until 90 years old or something like that. Lifetime payments from an original election to cover 2,000 retired pay could come to more than $2 million. Interesting thing about the SBP is the monthly SBP cost. Remember the $130 a month initial premium. So again, I got $2,000 a month benefit, but I'm only actually netting $1,870 because of the $130 a month survivor benefit plan premium. But that's not included in my taxable income. The true cost for SBP is therefore less than the amount deducted from retirement pay because less federal taxes will be paid. And for example, if you're in the 28% federal and state tax bracket, the true cost of a $100 SBP premium is $72. That $72 should be used when comparing the cost of SBP to a comparable life insurance policy. I completely agree with that. So what happens is they'll say, look, Josh, forget paying SBP. The $130 a month that you were paying, we'll put into a life insurance policy instead. life insurance policies after tax money. SBP is pre-tax. So you got to look at the two things. It's like comparing a Roth to a traditional IRA. You got to compare for sure. If you're unmarried at retirement, so you're ready to separate from service, but you're not sure you're going to get married, but you might get married or something like that, upon retirement, you may elect SBP coverage for the first spouse acquired after retiring. So you acquire a spouse after retiring, but you must make the election within the first anniversary of that marriage. You got to call DFAS. All right, so that's pretty interesting to me. I want to keep talking about something. The SBP annuity is determined by your base amount, which is essentially your pension. The base amount, the annuity is 55% of the base amount. And the base amount and the payments to the surviving spouse will increase at the same time by the same percentage of the cost of living adjustments. That your surviving spouse may remarry after the age of 55 and continue to receive the SBP payments for life. So if you die at 48 and your wife is 49, if she marries at the age of 55, she'll continue to get your SBP for life. If your surviving spouse remarries before the age of 55, the payments will stop. So don't remarry before the age of 55, but will be resumed if the marriage later ends because of death or divorce. All right. So that's the SBP. So here's what happens. I think a lot is people, and like this is my question I got. The guy said, what if I use the difference in not paying for not in this case, the survivor benefit, but the joint life survivor annuity? Because remember, with a commercial company, we'll say GE, you retire from GE, they're going to give you $1,000 on Josh or $900 on Josh and me. So this guy's rich ass, what if I took that $100 a month and I'm in pretty good shape and I bought $1 million life insurance policy? Well, the problem here is, and I don't know if the pensions are adjusted for inflation. I don't know, but for SBP, I don't think you should do that. And the reason because the inflation adjustments are enormous for sure. But there's a bigger problem. I'd say the vast majority of policies I've seen with SBP where they neglected to take SBP but instead bought a life insurance policy, those policies are getting hammered, and they're not going to keep up unless the pensioner, Josh, put some serious money into them. And the reason for that is quite simple. Sorry about my hair being a mess. I haven't showered yet. That's why I got my Pat the Patriot hat on. Give me a thumbs up for Pat. Yeah. The reason for that is because a lot of these guys took the policies out in the early 90s, late 80s, when the interest rates were way, way higher than they are today. But because interest rates have been dropping steadily, there isn't enough cash value to keep those policies in force. Because a lot of these policies are universal life. Universal life, the illustrations looked fantastic in the late 80s, early 90s because the interest rates were paying 6, 7, 8%. And you're like, man, they're not guaranteed, but they're basically as safe as you could possibly get because the rates were so high. But so progressively, they just got lower and lower and lower to where we are now with the 10-year. I just didn't look at this yesterday. I bet it's like 1.4 something. Let's see. Yeah, this 10-year is still 1.528. So there's just, it's nuts out there. And so because of these policies where they weren't getting enough interest on the cash value, those policies are going to blow up before the pensioner dies. And so what happens in that case, the pensioner needs to really make a huge influx of cash into those life insurance policies to keep them in force, or those life insurance policies will expire before the pensioner does. And if that happens, guess what? Then Charlotte gets nothing, no benefit and no life insurance. And that's the risk. It's just, I don't think it's worth the risk to do that. I just say at the end of the day, especially in the military, if you want to do on the joint life survivor, there's usually not a huge difference between the two. That's fine. But on the military one, I think you got to take the SBP. That's my argument. I make that recommendation 95% of the time, unless you have pretty good reason. You got intel that says your wife or your spouse will not live beyond you. If that's the case, yeah, don't take the SBP, but tread cautiously there. All right, hope this helps. Thanks now.